financial aid borrowing and repayment options. There is more information available online. Again, we do have a financial aid director that can assist you. And if there's anything I can help with, just reach out to me as well. So some basic good questions to start asking if you're not asking these are listed as below. So what are the current financial aid options available to you? You are entering a graduate level program, so what you may have been exposed to for your undergraduate coursework will shift a bit. It'll be slightly different as you go into the second level of education. And then the next question would be, what are the current student loan interest rates? These do fluctuate every year. We are coming upon a new interest rate here at the beginning of July. I'll go over that with you here shortly. But it's good to know kind of how that system works. It is based on the economy. So as the economy does better, these rates will go up a bit. As the economy kind of has some issues as it is now, rates usually go down a bit. Also, having a good idea what your repayment options are. It's foreseeable that in the near future, some of these repayment options will shift a bit, they'll change a bit. What that may be, we're not too sure. It doesn't necessarily mean that there's going to be anything drastically happening to what's currently available to students, but I would suspect that some of these will be consolidated a bit into new formats or new programs for students to move forward with. Also, loan forgiveness is a really big topic these days. It has been for many years. I don't foresee these options going away in completion, but knowing a good understanding of what they are and how they operate will also help you set up your current loan structures to maybe meet those needs as they get into effect when you actually graduate and put your loans into repayment. Another big question that a lot of students have is, how are our students at 5 branches utilizing the federal financial aid program? Roughly about 60 to 80% of students on average use federal student loans to pay for their education. It does fluctuate year by year and campus by campus. We have been seeing a little bit larger numbers of students trying not to rely on federal aid, but federal aid is usually available to all students if it is needed. We also have a large majority of our students working on a part-time basis. So this kind of presents another option to help minimize what you're taking out for financial aid. The program, as you've already heard from a few of our students, it is quite intense. So we highly recommend that we limit the amount of work that students get involved in to about 10 to 15 hours a week. I would say when you start hitting the 20 hours a week level, that's when you're going to maybe start seeing it impact your studies quite a bit. But each term can also be a little bit different with the particular educational load that you might be involved in. So some terms that might be easier and you can work more. Some terms, if you have review classes or if you're prepping for your board exams, you may need more time devoted to your studies. The school also has work study opportunities. So this is actually a program that's filtered through the financial aid program, through the Department of Education, that allows students to work on campus and therefore receive kind of pretty much funding from the school, from the Department of Education for that work. And what's super beneficial about that is you're on campus, you're actually in the setting that you'll be, normally operating in as a student. And it usually presents a little bit more of a flexible work schedule. So students can actually kind of attend to their studies, but also get some additional hours of work in, which can then decrease the amount of financial aid that they have to take out. So, 2 basic types of student loans. So here at 5 Branches University, we kind of have 2 main tiers of loans that students are involved in. Federal direct loans. That's kind of the loans that most students are looking at initially. That is further broken down into Stafford loans, which has a unsubsidized and subsidized version. Through undergraduate programs, might have had some of your loans subsidized. That is no longer available at the graduate level program. That was done away with a few years ago during the Obama administration. So currently speaking, all Stafford loans are unsubsidized. And then any student that's needing additional funding would then look at Graduate Plus loans. These are still loans through the Federal Direct Loan Program, but it's only available for graduate students. And this program that you're coming into here is considered a graduate level program. There are also private student loans, which 5 Branches doesn't tap into that often. And these are just loans that you would find through your local bank down the street. So whatever bank that you're currently banking with probably has some form of student loan program. So Wells Fargo, Chase, Bank of America, credit unions, these present another option. However, the organization of those private student loans are something that you want to really consider because they don't have the same protection as the federal direct loan program does. So diving a little bit deeper into the federal direct loan program, this is a need-based program. So all U.S. citizens are eligible to get financial aid through their education. The interest rate is something to definitely consider here, and this is tied into the T-bill. And this percentage rate will fluctuate each year based on the health of the economy. It is not a variable rate. Once your loans are signed off on, once you go ahead and receive that funding, until you possibly restructure those loans at a later date. The interest rate period runs from July 1st to June 30th. So we're currently kind of at the end of one period, going to be jumping into the next interest rate. The Department of Education has not listed their loan interest rates yet for graduate level programs. I believe information for undergraduate level programs is slowly kind of being released to the public. But at this point, it's kind of an estimate where we'll be at for graduate level education. There are various government-sponsored repayment options. So this is kind of the bigger part of how you want to look at your loans is once you take and borrow money from the government, you then, once you graduate, need to repay that money. So currently, there's a variety of options. A large percent of our students do utilize the income-based repayment structure. So that is listed out as ICR, IBR, pay, repay. There is talk with the current administration to simplify that and only offer one option. So there might be some consolidation of each of those programs into one future program. That seems likely to go forward. If by chance that doesn't happen and maybe at a later date that's also revisited, most likely any student that is in a current repayment option should be able to maintain that repayment option. So usually for student loan situations, individuals are granted whatever agreement that they've gone into, and then moving forward, those changes will go into effect. Another really big hot topic these days is PSLF, Public Service Loan Forgiveness. So there's a variety of loan forgiveness options out there. You can quickly do a Google search and find a complete list of that. That's becoming more available. But PSLF is kind of what I would consider the golden ticket, mostly due to the fact that this is tax-free forgiveness. This is not necessarily associated with just one or two repayment options. Usually this is in line with IBR, pay, and repay. And what happens is for IBR, for pay, for repay, there's actually a loan forgiveness clause within those repayment options. This loan forgiveness kind of opportunity is in addition to that. So you really want to kind of tease out some of the pros and cons of how these loan forgiveness options work. For some students, this is going to stretch out their loan payment schedule quite a bit, and that might not be the best option moving forward for them. So, federal direct loans at 5 branches universities. So mostly we rely on the Stafford loans. And again, these are unsubsidized loans. The new interest rate is estimated to be at about 4.3%. And again, we don't know for sure. That should be released here in the coming weeks. And that's going to run from July 1st to June 30th of 2021. The old rate, or the rate that we're currently in right now, is 6.0% or 6.08%. So you can see that it's been about a 2% decrease. So this is actually a good time in terms of financial aid to actually take out loans. It's the lowest rate that we've seen in a while. For your Stafford loans, all repayment options are available. So you do get to choose how you go into repayment once you graduate and once you go through your grace period. So repay, pay, IBR, ICR. You can even go into a 10-year repayment option or a graduated 10-year payment option. Also for the federal Stafford loans, of course, deferment, economic forbearance, public service loan forgiveness eligibility, it's all kind of lined up with the Stafford loans. And again, your Stafford loans are available to all U.S. citizens. A second tier for any student that's needing additional funding to pay for their education would be our Grad Plus loans. This is open to graduate level students only. And here at 5 branches, you're automatically going to be a graduate level student. And the interest rate for this program also shifted quite a bit, about 2%. And the new rate is estimated to be at about 5.3%. And again, this will run from July 1st of 2020 to June 30th of 2021. All the same repayment options via federal laws are also eligible for your Grad Plus loans. Also deferment, forbearance, and PSLF. So pretty much the only difference between your Stafford loans and your Graduate Plus loans is going to be offering you additional financing. The students that their budgetary needs aren't met with their Stafford loans can get additional financing via the Grad Plus loans, and you need to be a graduate level student. The Federal Direct Loan Program is a need-based program. Actually, I think I went in the wrong direction here. So let's go to the income-based repayment option. So this is something that the students have a lot of questions about, which is a really important topic. So there is actually an equation that goes into your repayment options when you go into your income-based evaluation. So what they're looking at is the total amount that was borrowed. And again, for some students that are borrowing a low amount, an income-based repayment plan is probably not the best approach. But at a certain level of loans, this becomes a more economical, more kind of forgiving way to actually work through your payments on a monthly basis. So the first kind of part of the equation is how much you've actually borrowed over the course of your studies. And of course, existing loans with undergraduate programs can also be thrown into that. And then consideration is given to your actual income. And here they're going to be looking at your AGI, your adjusted gross income. And this is going to be that main number that's usually at the front page of your tax form. And pretty much as your income rises, as your AGI number goes up a bit, your monthly payment via this equation will also go up. And if by chance your income gets lowered, right, your AGI will get lowered, and therefore your monthly payments will also get lowered. So what this is attempting to do is to actually put into consideration how much money you have left over on a monthly basis that you can put towards your repayment of your loans, your student loans. For some of these, for actually all the income-based repayment options, all but one, I believe, there's also a loan forgiveness kind of portion to that. So using one as an example, your PAYE, the remaining debt is going to be absolved at the end of 20 years. So you'll be making monthly payments based on the equation we just talked about. And whatever money is still remaining at the end of 20 years, well, then it'll be absolved via a loan forgiveness option in that repayment plan. Now, how this is different than PSLF is with your repayment, your income-based repayment options, what is forgiven is actually taxable income. So on your next tax form, the amount that was forgiven previously would be listed as additional income to your normal income, and that will be thrown into your tax equation for that year. So it's forgiveness, but there is a taxable forgiveness kind of situation playing out there. Your PSLF, your public service loan forgiveness, is an additional loan forgiveness option that would be possibly placed on top of your repayment option. So there is some confusion about that. Just make sure you're really looking at how those are structured and what's best for your current situation. Private student loans is another option. I would highly caution about utilizing private loans. It is usually something that's available to all students that are enrolled in a program. It's also heavily weighted to being more of a credit-based program. So they're going to look at your credit history, and your interest rates are often structured around your previous credit history and your current credit score. So they're going to scrutinize things a little bit more, way more than the Stafford loans. Your Grad Plus loans look a little bit about your credit history, but not nearly as much as the private loans. Also for your private student loans, there's a very limited number or sometimes no repayment options. It's that institution, it's that bank, it's that private institutions that's restructuring your repayment plan with them, and usually that's based on the 10-year repayment option. So IBR, pay, repay, all of your income-based plans are usually not part of that type of restructuring. Also, PSLF, your loan forgiveness options beyond your income-based repayment options, are not part of that option as all. Here at Five Branches University, we do our best to exhaust all other options before we go down the private student loan direction. Currently, I really don't know of any student that is actually utilizing private student loans. But again, it's still a possibility depending on a particular student's needs. Last but not least, here's Daryl Cullen's information. So if you do have more questions about student loans or specific questions about your particular needs, you can always reach out to me if you want, or you can also call Daryl at the San Jose campus or send him an email.